So, welcome to another video from 10x Investor Education. Today, I would like to talk about what I'm thinking, what is happening in the market, why a particular sector of stocks are going up, and why a lot of other stock sectors, including tech, SPACs have been going down. So, 50% of the stocks are owned by top 1% richest people in US. So when Biden tells them that they have to pay 40% in capital gain taxes compared to 20% long term capital gain taxes that they are paying before, people have thought about it, and a lot of people are taking actually profits, especially the stocks in which they made a lot of money, which has been a tech sector the whole last year. So that is the reason, I think, one of the main reason. A lot of people think interest rates, but actually interest rates have been falling down. They are not at the peak. So the interest rates are not the culprit, but there are multiple things happening. That is where market rotation is happening, severe market rotation. So people are actually taking profits in tech sector and actually rotating some of that money into value sector. Remember, Biden did not talk about actually increasing the taxes on dividends, stock dividends. So there is a huge chance, and people are actually flocking to value as well as stocks with dividends such as AT&T. AT&T was below $30 for a long time. If you look at last couple of days, it's going up every day. And financial stocks, they have been going up every day. Bank of America, XLF ETF, and the stock that I have been saying in my portfolio, Navy, almost going up every day, and they had excellent quarters. So they are looking into safe havens. I'm not saying after 2 weeks people might rotate into growth sector because they have sold off so much and value has gone up so much. That might happen, but you cannot keep doing rotating money. That's not what we can do for long-term investors who are not day traders. So last year I was very heavy on tech, and this year, as soon as I realized, I have been hearing from everyone on CNBC saying value. I rebalanced my portfolio to have close to 70% value and 30% growth, and growth also cyclical growth, not very high growth stocks. You have seen how Apple and Facebook have excellent quarter results, but still their stocks not doing great so far. So this is the reason why I have been actually recommending a lot of value stocks, infrastructure stocks, home building stocks, financial stocks on my tweeting continuously on my Arcade 10x investing. If you see some of the stocks, especially Whale, which is into commodities, Cleveland Cliffs, and CX, which is Cimex, which is into cement. Last couple of weeks, they have been hitting new highs. They had a great quarters, and I have been continuously tweeting on my channel, and I have been continuously buying. So a lot of stocks that I tweet doesn't mean that I'm like not optimistic. I continuously buy. For example, Big Five sporting goods. As soon as I tweeted, I had been buying that stock for a long time. As soon as I tweeted yesterday, I bought more of the stock because I know they had excellent quarter. And I will show in a minute, share the screen and show their quarter results, but they had excellent quarter, and then they get decent dividend, and also I could really good hard call premium on that Big Five sporting goods BGFV. So that is kind of stock of the week for me. But before getting to sharing my screen, I would like to also talk about other stocks. So as you guys know, I have been talking about a lot of home building stocks, how I have been investing, and how they have been hitting high almost every week. So people are investing a lot of money into their homes. So not just home building. So a lot of people are, once they buy the homes, and they have to decorate it. So the stocks in the sector are examples are At Home. For example, At Home was bought by today by an investor company for $2.8 billion. Okay, I had invested in Michaels, so that was bought over last month by Apollo Group for a big money. So both of the stocks I have made ton of money. So another company in that sector is Kirkland. I have been investing since it's $2-3 in a year back, and it's going up every month. It's close to around $30. So this is where money flows, and a lot of the stocks, including big five sporting goods, they are not very expensive stocks. I think the big five sporting goods PE is around 7.5. They have close to $1 billion revenue with only $500 million market cap. So that is how the some of the value stocks are. People fall to SPACs and high growth sectors, very speculative on these things. But right now, with the rotation is going on, I think these are the sector and these are the companies that are going to do really well for rest of the 2021 in my view. So I'll share screen my view and show actually my holdings as well as my profits and why I've been keep buying the stocks. So please do not take this advice as to buy the stocks at these prices. I have continuously, I'll take whenever they go down 10%, I have linked orders to buy some of the stocks, but I constantly accumulate on price when the price goes down on the stocks. So this is purely education channel. Please, I'm not even an investment advisor. Please do not think as investment advisor and buy the stocks. So, and please click the like button and turn on your notifications if you are first time for this channel, and I'll share my screen in a minute and I'll show you what I'm talking about. This is the stock I am talking about. Big Five Sporting Goods Corporation. The symbol is BGFV. Small cap blend, value, specialty retail. And if you look at the stock, almost every sporting good company stock, including Dick's, Hibbett Sports, everything is going up for last 1 year since COVID. So these guys have been quarter after quarter posting results. It was just few dollars stock like few months back. At now even it was $20 stock around 3 days back. And as soon as the quarter results were announced, I tweeted about the stock, and I've been still buying the stock at $20, and then in last 2 days it's been going up almost 35%. So this is the company I tweeted about as soon as quarter results came, and this is almost $1 billion in sales. And then before the stock price went up, it's less than $500 million market cap, around 450, and I was getting very good dividend. At the same time, I would also get good covered call premium, long-term covered calls. So big sporting goods, the quarter one EPS is 96 cents and the estimate was 50 cents earning per share. Okay, this is the profit. So sales were 272 million and the estimate was 260 million. In my view, this is a great quarter, almost 100% of the profit estimate, the beat. And that's the reason why the stock in the market has really responded well with good stock appreciation. As I said, value stocks, especially small cap value stocks, which printing a lot of money, I am interested in it. So P by E is 7.4 and dividend is around 3%, and earnings per share is like close to $2.5, and market cap is small company. So this is the stock I've been buying, and I have owned a lot of this stock, as you can see here, and close to 77% return in just few months. And this is the stock I have been teaching about it. And also if you look at simply Wall Street analysis, lot of green stars on everything. So earnings grew by 2,800%, and stock is trading 72% below estimate fair value. And if you look at here, except some negatives, a lot of the 7-day return is 50%, 1 year return is 2,300%, and this is the most interesting thing. The value they think for the stock is $101 compared to current price of $28. Okay, last 2 days it's went up by 30%. So I'm not recommending to buy the stock at this price, but if it falls by 10, 15, 20%, that is where I am planning to grab a lot more. So again, this is not my initial advisement, this is my plan, because I am already invested 2% of my portfolio in this company, which gone up a lot. So this is one thing I am talking about. The other stocks I've been showing you or talking about is At Home Group. So most of the home decorating, home furniture stores have been going up like crazy. So again, At Home Group, as you can see here, $30, sold, and the company is acquired by Hellman and Friedman for $2.8 billion. That's again a lot of ton of money. The company has huge growth this year. And again, Kirkland, which have been, if you look at 1 year stock, this return, I had multiple videos on the stock before. It's like $1 to $2, has been going up like almost every month, every quarter, almost $30. Again, this PE doesn't show, but actually PE is a lot less, and then held by a lot of institutions. And this is again $500 million company with almost like $500 million in sales. So yeah, this is close to $200 million sales per quarter, which means like this is $500 million company with close to $800 million sales. So these are the companies that I have been talking about and owning this, and certainly I own ton of Kirkland, again 600 stocks, around 4% of my portfolio, again 60% return on this. So these are the stocks in home and home decorating sector, where on top of home building, where money is gone a lot. This is where I invested, and I really like this sector. The next sector I was talking about is actually infrastructure stocks. So I have been tweeting continuously Cleveland Cliffs, and then Cimex. As you can see here, Cimex, today chart is 1.65, and 1 month is almost hitting every day, every week new highs. So as you can see here, again, I'm a big investor in this infrastructure stocks, close 2% of my portfolio, 1,300 stocks. That's good, decent return. This doesn't give you any dividend, but it gives you very, very good. I usually keep on selling at $10 or $12 covered calls for me, and I get like a decent premium, like 15% premium, which is good. If 40% stock appreciation and 15% premium, that's good enough for me in less than 6 months. So that is about Cimex, which is also infrastructure stocks. And the same lines, Cleveland Cliffs also has been hitting new high this week. So it's close to it hit, I think, 21 yesterday. It came back a little bit again. It's close to $21 again. So this stock I have tweeted multiple times. I've been buying this since $8. Again, this is commodity stock, infrastructure stocks. I own a decent amount of money in this stock as well. So the other one I have tweeted multiple times is again with very, very good dividend, and the stock that controls the nickel market and iron market across the globe, biggest iron producer, commodity again, and steel prices have been hitting high every day. These are not like tech stocks. They double or 50% in a day. But for me, still, I'm happy with this return and 5 to 6% dividend and 10% covered call premium, things like that. So these are the stocks I have been heavily focused on value investing. When I say value investing, not buying expensive stocks. These are stocks with some dividend and some covered call premium and a potential to grow this year, because people are rotating heavily into this kind of stocks. So this is what I have been tweeting, and continuously I have been buying continuously, and I have been actually investing into this. So let me know what you think this kind of stocks. And as I said, this is the biggest stock of the week for me, Big Five sporting goods, and really happy with the quarter. And then I'm looking for long-term investment for this, at least for the year of 2021. They actually increased the estimate for the next quarter, and I see a lot of any time if the stock falls around 20, 22, 23, I think I'm going to grab more. I'm not sure it's going to fall, but if market correction happens on again value stocks, and then that might fall too. So that's what I'm keep looking for. But that is, I would say, stock of the week, and all these stocks that I'm talking about are really what I'm aiming for this rest of the next couple of quarters or rest of the year. Please click the like button, and I try to cover and tweet as soon as I see good quarters and couple of the companies. So I would seriously suggest to follow 10x Investor Education, RK 10x Investing on Twitter, and see you on my next video. Thank you.